Hello and welcome to Your Trades. The week ahead with me is Karunya Rao, and over the next 30 minutes we'll tell you which are the stocks to watch out for, what are the earnings to expect over the next 30 minutes. Let's first just start with what happened in this entire week, how the markets were. Now, if you just look at the markets towards the end, there was a sort of surge that was seen in the market, and you did see the crude going down as well as the rupee coming off the day's lowest point, and that led to a sort of spurt in the last couple of days, especially for the large cap ones. HPCL on your screen up close to about 4% for this week. Vedanta, due to some bad news, was not particularly doing that well in the entire week, but tried to came up on the higher side. Overall, this week, first 3 days, not that great. Last 2 days, pretty good, which made the markets look absolutely flat as far as the trading session is concerned. Some of the stocks that were in focus: Vedanta, HPCL, ONGC, Ultratech on the basis of numbers, Tata Steel, ITC, as well as Hindalco, Bajaj Finserv, that did particularly well throughout this particular week.
Let's also get you excerpts from some big interviews that we had throughout the week. There were names like Shankar Sharma from First Global, Purinju Vilayat of Equity Intelligence as well.
Let's welcome in our first guest on the show, Kunal Botra, as well as Sudeep Bandyopadhyay now joins us. Kunal, let me come to you first. How would you describe the week? First 3 days, not that good, but the last 2 days making a catch-up role?
Yes, definitely, Pankaj. And, I think that remarkable recovery on Thursday and Friday, I think, just about changed the tone, for the markets, because 3 days previous, earlier than that, or start of the week, the markets were going through an extreme amount of pessimism, sector-wise, stocks going through a round of correction of 15-20%. But on Thursday, and especially on Friday, because Friday, what sort of stood out was not just the index moving up 100 points, but the market breadth improving. And there were a lot of beaten down stocks. They were managing to rally 8-10% on an individual day. So I think that was one of the key takeaways on Friday. Bank Nifty managing to make that good comeback or strong comeback, I think was the added sign. So on weekly charts now, the Nifty has formed a bullish hammer pattern. So the carry forward sentiment for start of the next week would be on the positive side, and you could look at maybe 100-150 points rise further on the index before you sort of inch up towards the first key resistance mark. That's around 10,800.
Okay, let's also get in a fundamental perspective on the market. Sudeep Bandyopadhyay from IndiTrade Capital is joining us. Sudeep, what do you make of the week gone by? There were a slew of earnings which came by. There was also the result of the floor test, a lot of corporate developments as well. So overall, how would you sum it up?
Well, I think the week ended pretty well. Till about Tuesday, Wednesday, people didn't expect this kind of an end. It was predominantly, the recovery was aided by a couple of things. One is, I think, oil started recovering. That was a very, very good signal. And correspondingly, Indian rupee also recovered quite a bit today. Of course, you have to also factor in the fact that, the positions were taken in a manner and short covering had to happen once the trend reversed. And that did kind of result in, the change in mood for the markets, which is what we got today. And I think it was a welcome relief of a recovery for the last 2 days. The way the mood is shaping up, I think next week should begin well. I won't be surprised if there is a little bit of volatility which continues even next week, next week being an expiry week. But overall, I think things are beginning to look positive. The kind of initial phase of the current week was really bad, and things were looking set for further downfall. But that trend has been arrested, and now we are looking for a minor upswing even next week. And the way things are, I won't be surprised if the expiry ends well.
Right. Sudeep, just in terms of market movers, do you think that the risk on mid caps is much higher at this point of time versus the large cap? Of course, they went up also in that way, but now when the correction is happening, they are falling also in a similar way?
Well, I think, this was expected, and Pankaj, very clearly that's how the market has been moving for a very, very long time. The first, whenever there's a risk-off mood, the first thing to get hit is mid-cap. And whenever there is a risk-on mood, the mid-cap kind of comes back. That's pretty much what we saw being played out. But remember, what's happening is some of the mid-cap earnings have improved significantly. The performance have also improved. So there are quality mid-caps where I think they are displaying rather the trends of large cap, where the the market has been giving them great support and they have been inching upwards. So yes and no. Generally, mid-cap does get affected whether there is a risk off mode, but mid-cap performance has generally been improving.
Kunal, coming on this, which are some sectors where you've seen maximum reversal come by, because you were saying that there are certain pockets, certain sectors which are likely to rebound?
So, currently I think, the Friday session was more important because that sort of categorized a lot of sectors which were trying to make a good comeback. So, OMCs were, one of the few sectors which not just on the, volume front, but on the price, on the, open interest positions as well, seems to be making a strong comeback. And there are, hands getting changed, in the open interest positions as well on Friday. So, that was one sector which I believe should see a follow through price action. Now, the other sector which I believe, is the Nifty IT. It reversed, on Friday and, reversed most of the gains, and both on the large cap as well as on the mid cap IT space. So I think that could be the other sector which might see maybe a short term correction, not a bigger correction, but I think for the next 1 week or you might see these, stocks seeing profit booking. On the other side, reversal was seen into many of the metal stocks, Tata Steel, Vedanta, Hindalco. A lot of these stocks are coming back and hitting their 200 moving averages. So, the risk on, sectors are coming back into the markets and coming back into the action. I think that's positive for the markets. But on the other hand, these defensive sectors or erstwhile defensive sectors like IT, they could see some bit of correction.
Right. Sudeep, what do you make of the oil companies, the sort of move that they have, whether it is OMCs, whether it is a name like ONGC? How would you look into it?
Well, I think, I have been consciously avoiding the oil stocks. Look very clearly the way the international oil prices have moved. The government of India has very little choice but to kind of get to a situation where the oil companies upstream and downstream start sharing the burden of the price increase in the global oil prices. The way the Indian market price of petrol and diesel have moved over the last 15-20 days post the Karnataka election, it's unsustainable politically as well as inflation wise. So somewhere the government will have to come and make these guys suffer. Whether it's as a super tax on ONGC which is being talked about, or whether subsidy burden sharing in a particular manner which is completely at the decision of the government. Earlier the formula is to be 1/3, 1/3, 1/3. One doesn't know, but somewhere they have to take the hit. So it is unrealistic to expect, considering the global oil prices, that the oil companies will emerge as winners under the current Indian circumstances. So it is better to stay away. Fundamentally, they are good companies, strong companies, but the environment is not right to buy them.
Kunal, how are you reading into the banking space, especially the PSB, given the kind of amendments that we saw, the likely amendments to IBC? PSBs have rallied a fair bit on back of that. But going forward, how are they looking at the charts?
So, I think after SBI's rally, because I think that's more prominent, it holds a lot of, weightage on the PSU banking index, and as well it's, Nifty 50 stock. But, I think after SBI's price performance in the last, 3 days, 4 days, strong volumes, the price not seeing a correction, generally when these stocks rallied, in the last few months of behavior, not just few weeks, but 5, 6, 7 months of behavior, whenever there was a sustainable rally 5-7%, these stocks corrected and managed to make new lows. That was not the case. So, what I'm trying to say is that the behavior for many of these PSU stocks or the PSU banking stocks, especially post the SBI and earnings, I think have changed. You've seen now volume accumulation happening, short covering data on the, on the future side for many of these, private sector banks, mid cap as well as, tier 2 large cap names as well. So that's a sign of stability. So I think post that big correction, these stocks could now go into a bottom formation process. Might take a couple of weeks, but I believe that the chances of reversing the trend for the PSU banks on a positional basis is extremely high. Anyone who's looking to buy the stocks in this space, I believe SPI, Bank of Baroda, even Bank of India and PNB, I think could be candidates where you might see these stocks rallying in the next 3, 4, 5 weeks, say another 15-20% as well.
Right, Kunal, just request you to hang on. Sudeep, just request you to stay with us. Neelu, my colleague, is now joining us. Neelu, which were the stocks that were in focus this week?
Some of the small cap stocks which were buzzing in trade last week was firstly Just Dial, which had gained 16.5% on strong Q4 numbers, and plus the improvement in user engagement has also gone up by 28.6%. NCC is the second stock in focus, which is up 13% over this week, which had also posted really good set of numbers, and plus they have been upgraded by a lot of brokerages. Firstly, CLSA maintains a buy stance with a target price of 210. Well, Rampur Chini is another good, buzzer in the stock, which has gained around 14% as sugar shares are in a sweet spot on anticipation of positive government measures. So the losers this week were Granules India is down by 16.3% as the stock plummets on bad or rather weak set of Q4 numbers, and Reliance Communication has gone down by 6.5% over this week as Reliance Communications settlement with Ericsson is unlikely to happen anytime soon.
Thanks, Neelu, for that. Meantime, market veteran Shankar Sharma from First Global caught up with Nikunj Dalmia to discuss what to bet on and what specifics to factor in while investing. Listen in.
Broadly, the cycle has not picked up, but the sectors that have been doing well, like autos or banks, etc., their numbers have been good. And if you see, those are the very stocks that are doing well. But you clearly don't expect big embattled, debt-ridden companies to do well. So you have the ADAC group, which has obviously been very weighed down by debt without any catalyst of earnings. I mean, that's not going to revive. I mean, that's very clear. But companies which didn't have debt, you have the auto pack, did not have debt at all, they have been doing very well over the years, or consumers for that matter. So earnings growth is very patchy. Okay, but when you take it in an overall sense, it averages out to almost nothing. Sectorally, some sectors have had very good earnings growth. I maintain the small caps look great for 3-4 years, and I continue to maintain that. I mean, I think even now, there's so many, and people talk about valuation fraud in small caps, so that they've run up. Yeah, they've run up, but earnings growth in some of them is just off the charts. And we have seen good stocks fall 40% in the last, let's say, 4-5 months. That's the bottom. That is the bottom. As long as there is no debt on the balance sheet, good stock, good earnings outlook, or at least intact earnings outlook, and then they are down 30-35%. It's a no-brainer, because even in 2008 they didn't fall more than that.
On that note, we're taking a break. Coming back in 2 minutes.
Welcome back. You're watching Your Trades right here on ET Now, and let's keep the market chatter going. Sudeep, let's come to you first. We saw a slew of pharma companies come up with their Q4 report card this week. There were a lot of big names, a lot of mid caps as well. What do you make of this sector? What's the outlook according to you going forward?
Well, I think I'll maintain my cautious stand on the sector overall. Look, the issues in the US markets are far from being over. The pricing pressures a company like Sun Pharma is facing in US is real. The regulatory issues some of these large pharma companies facing in India are still not behind them. If a pharma company has come up with a new launch, let's say like a Cadila, the performance has been good. But somebody who didn't have a new launch and have a US kind of skewed market, there I think they have been suffering. So it's still some distance away before they come up with they come to a position where we can recommend a buy or go ahead and start acquiring positions. I think some of the mid-cap pharma names can still be looked at, whose business is not pharma is still avoidable.
Right, Kunal, what do you make of the pharma stocks? They have some of them have done well in terms of numbers, but however the reaction has not been that great.
So yes, Pankaj, and the prices are not reflecting the exact sort of buoyancy, because it's been on and off. You look at Sun Pharma, yes, the stock has recovered in the last 1 week, especially in the fag end of the last week. Dr. Reddy, post results is still not being able to find its momentum back. Volumes were very high on that result day, and the candlestick pattern was positive, but there's no follow through price action. You look at the other stocks which are, something like Biocon, which has been trading with a stronger and fair degree of upside. So that stock remains to be on a stronger uptrend, trading below its 200 and the 50-day moving averages as well. So it's in a comfortable territory, and you might see these stocks continue to head up higher. So Cadila also, I think, had a very good candlestick breakout on Friday post results. But whether this results into a meaningful uptrend, I think the data still needs to be watched. I would look out for something like maybe an Ajanta Pharma as a short covering trade, because it's been beaten down significantly in the last 2 weeks, almost 25-30% in the last 2 weeks, and the indicators are extremely oversold. So maybe a trading bet here and there could be possible into individual pharma names, but the sector overall is still not out of the woods.
Right. Request you both gentlemen to be on hold with us. Next up, let's go across to Ajay to get a sense of what the dealing rooms are saying, some important cues to watch out for, and most importantly, what are some stocks that one can keep an eye out for next week.
Well, the way markets sprang back almost 1% on Friday, most of the traders believe that the next week could belong to the bulls. We've seen quite a lot of damage in the last couple of days on the benchmark. Mainly the broader markets were battered in trade, and now there is some amount of value picking which is happening in the market and may continue the next week as well. Traders believe that the way rupee has rebound almost 30% on Friday, this recovery may continue in the next week as well. In fact, all global markets have kind of become quite supportive for emerging markets. So a lot of fund buying is also expected to come back at lower valuation, especially high quality numbers which have been released this quarter. Those are the kind of stocks which are likely to see some more buying in the coming session. So winding up of the earnings season, for the fourth quarter earnings season, along with how the way rupee and the global cues actually turn out, will be direction givers. Two stocks to watch out for. One is of course Pidilite, where the management commentary has been very good for volume as well as a product mix going forward. The stock is at record highs, and traders believe that follow-up buying may actually come. And the second one is United Spirits, again benefiting from lower raw material prices and good buying coming back over there. Traders believe these are the two stocks which are also on the buy list of a lot of funds which did not satiate their appetite on Friday. So coming week as well, they may continue to see some follow-up buying, but the market is likely to trade with a positive bias in the coming week.
Pranay, which are the earnings to watch out for?
Well, talking about the big boy first, from L&T we are expecting revenue growth of 13% and profit growth of about 19%. So you will see margins expanding by about 60 basis points to 12.3% thanks to the momentum continuing in the core engineering and construction business and ably supported by the infrastructure. You've seen good order flow momentum continuing because of the large as well as the base size order finalization. So momentum on that into FY19 would be the key monitorable, because this year we are expecting that FY18 revenue growth will close at about 12%. The order inflow guidance, which was kept at flattish, would be maintained this time. And also, what is the outlook on working capital into FY19? The asset monetization plans, like we've seen in the demerger of some of the companies, as well as the order inflows for FY19. Then moving on to Coal India, we are expecting revenue growth of about 8% at 25,000 crore rupees. EBITDA will grow faster at 38% thanks to higher volumes in the core as well as FSA, though e-auction volumes and realizations are expected to be flattish. EBITDA margins are seen expanding by about 6 percentage points to 27 because of the higher volumes, like I mentioned, and the price hike benefit, which will show even on a Q-on-Q basis. So profit jump will look pretty huge at about 89% for the same reasons. Going forward, the key monitorables would be the global coal price trend and the e-auction volumes and price realization seen. For M&M, lastly, we are already expecting good numbers because volume growth has been 25% overall, thanks to the momentum in the tractor business, which grew by more than 40% in volumes, and also UV as well as the three-wheeler business. So realizations, if you look, overall it's seen low by about 1%, but because of a higher mix of tractors this time, that means better product mix, you will see margins expanding by about 180 basis points to 14.3%. So like I said, the volume growth is 25%, revenue growth is seen similar at about 24%, profit also is seen similar at about 25% growth, 1,000 crore rupees. Going forward, the key monitorables would be outlook for the UV business, tractors and the CV business for FY19 in terms of volumes, and the update on the smaller businesses as well as Sangyong and the new launches which are planned.
Thanks a lot, Pranay, for that. Let's get across our guests once again. Kunal, what are some trading ideas that you've picked out for our viewers?
So I'm trying to trade a bit contrarian on the OMCs. As I explained earlier, that many of these stocks have seen not just good delivery volumes data on the cash side, but even on the FNO side, there was a good amount of short covering. BPCL is the stock which I'm recommending for a buy, targets of 400, stop loss at 370, and the second is a buy on Just Dial. It not just crossed a swing high on Friday, but also managed to cross almost a 2-month or a 3-month high. Both in terms of volumes as well as price. So I think that's a buy. Short-term targets of 550, stop loss at 475.
Sudeep, what will be your top picks?
Well, I think construction is one sector which we like, and road construction is an area which we have been kind of working on. Dilip Buildcon definitely is a good buy at current level. The stock had gone up and corrected now. So at current level, it's got a significant upside from here on. The entire tailwind of the government orders, Bharatmala project is behind the company. Also, the company has managed its debt, and its on-time delivery is quite commendable. So, on the construction side, Dilip Buildcon. On the automobile side, we like Maruti quite a bit. Again, the same story, market leadership, 50% plus market share, and rural market demand expected to pick up post a good monsoon. And after the price correction, again, for a long-term investor, it's a great buy.
All right, Sudeep as well as Kunal, thanks much for joining in and giving us your perspective as well as your top trading ideas. With that, we're almost out of time on this edition of Your Trades. But before we end the show, here's an interesting bite from market maverick Purinju. As we close the show, let's hear that out.
I will bring it down to say 800 companies in India, which are investable quality with some kind of a business model, a worthy business model, and which are relevant going forward in the Indian economy and for Indians' consumption. We have 800 companies. So the ownership of these 800 companies, I'm telling you, is the best asset class in the whole world for an Indian to invest as an opportunity as on today. By the December, January, I don't know, a lot of people have noticed that we have been buying into some larger company. The so-called high-quality stocks means, I still differ with that definition. With the higher P's, with the more margin of safety. Now, but at the same time, today, the way markets, the stocks in mid-cap and small caps in general have fallen, it gives a very special opportunity, a pocket of opportunity out there where you may need to, presume certain things, where the quality, the stock is not considered to be high quality for certain reasons, or there are some negatives in some of the companies. See, companies without any negative news will be overpriced. That is the style in India always. But even such companies, because of the higher economic growth happening in this country, like an HDFC Bank or some of these Colgates or Liver, ITC, they go on giving very good and impressive CAGR for the long-term investors. It's true. I think because we bought more than 5% here to disclose in Vietech Wabak, and I think Hawkins also came in because of the block deal came in public domain. Of course, Kaya is the one which our largest holding in our portfolio management. We are holding nearly 15% of the company. We are still buying. So, these are all some themes and some ideas which we believe has capability to create wealth in the coming 5-10 years in India.